Unit 5, the trial balance and the final account of a sole proprietorship. Section 2, disclosed and undisclosed errors in a trial balance. By the end of this session, you should be able to differentiate between errors disclosed by a trial balance and errors which are not disclosed by a trial balance. List and explain the general types of errors which are disclosed by the trial balance, and list and explain errors which are disclosed by the trial balance. Errors not disclosed by the trial balance. As discussed in the previous session, a trial balance helps to determine the equality of the total debit entries with the total credit entries, which is a proof of the arithmetic accuracy of the trial balance. However, the agreement of both sides of the trial balance does not mean that no errors may have been committed. Some errors could be made, but they will not be disclosed by the trial balance. The basic characteristics of such errors is that when committed, they affect both sides of the double entry, the debit and the credit sides, equally. In effect, such errors affect both the debit and the credit sides by the same amount. Therefore, the trial balance will not reveal their existence and still balance. There are a number of such errors, including the following: error of omission, error of original entry, error of principal, error of commission, error of complete reversal of entry, and compensating errors. Error of original entry. This occurs where the original figure of the transaction entered in the books is wrong. For example, if purchases of 9,800 cedis is entered as 8,900, here both debit and credit are wrong, and this will not affect the trial balance agreement since they were all entered with the same amount. Error of omission. This occurs when a transaction is completely omitted from the books. For example, if a sale of 650 cedis is not entered in the books, the trial balance will still balance. Error of principal. This occurs where a transaction is entered in the wrong class of account. For example, a purchase of motor van to 25,000 Ghana cedis is entered in the purchases account. We know that a purchase of motor van is an asset and is supposed to be entered in an asset account, that is debited to the asset account and not to be debited to the purchases account. So if mistakenly it's debited to the purchases account, it is an error of principle and the account will still, the trial balance will still balance. Compensating errors. Here two errors of the same magnitude cancel out each other. For example, if the purchases journal is overcast by 2,000 Ghana cedis, the error in the purchases account having a debit balance will be compensated by error in the sales account which has a credit balance. When this happens, then the trial balance will still balance. Error of complete reversal of entries. This occurs where a transaction has been entered in the correct account with a correct amount, but entered on the wrong side of both accounts. For example, a purchase of motor van by check is debited to the bank account and credited to the motor van account. This error will not be disclosed because there has been both a debit and a credit entry for the same account. We know that the correct thing that should have been done was to debit the motor vehicle account and credit the bank account, but a complete reversal of the entry led to us crediting the motor van account and debiting the bank account. So this will not affect the totals of the trial balance. The debit total and the credit total of the trial balance will still agree. Error of duplication. This occurs where a transaction is entered twice or more in the books. When this happens, there will be two or more debit and two or more credit instead of one each, and the trial balance will still balance. Correction of errors not affecting the trial balance. The errors not disclosed by the trial balance are found. They have to be corrected by means of journal entries and then posted to the appropriate account. Errors disclosed by the trial balance. Errors that affect the agreement of the trial balance includes single entry. That is a situation where the double entry principle is not applied. Error in posting, same amount entered twice as debit or credit. Error of transposition, different amount entered for the same transaction. Omission of a balance, an account balance not extracted into the trial balance. Error in addition can be an overcast or an undercast. Extraction error, wrong amount to trial balance or correct amount to wrong side of the trial balance. Single entry. This occurs when one half of the double entry bookkeeping is omitted. The correction is effected by making the entry in the account omitted. So for example, cash sales of 3,500 Ghana cedis is debited to the cash book, but no entry is made in the sales account. To correct this, the sales account would be credited with 3,500 cedis as a corresponding entry to the cash entry that was made in the cash book. Error in posting. This involves wrong entry of an item as 2 debits or as 2 credits. For example, a credit sale of 750 Ghana cedis to a Japan is credited to his account. Error of transposition. This involves the entry of different amounts for the same transaction on the debit and credit sides of the account concerned. For example, a sales invoice of 4,800 correctly recorded in the sales ledger had been entered in the sales journal as 8,400. Omission of a balance. This is where a balance on an account is omitted from the trial balance. For example, a credit balance of 740 Ghana cedis in the purchases ledger has been omitted from the trial balance. Error in addition. This involves an undercast or overcast of a day book or an account. This involves errors in the addition of a day book or calculation of balances. For example, purchases day book has been overcast by 850 Ghana cedis. Extraction error. Correct balance extracted but placed on the wrong side of the trial balance. For example, discount received balance of 680 cedis has been posted to the wrong side of the trial balance. We know that the discount received is an income and should be on the credit side of the trial balance. So if it is mistakenly rather recorded on the debit side of the trial balance, it will lead to the trial balance not agreeing, the debit side and the credit side of the trial balance not agreeing. The use of the suspense account. When the trial balance disagrees and errors are not immediately detected, a suspense account is opened to take care of the difference whilst time is taken to trace the error. If the debit side is short, suspense account is debited. If the credit side is short, suspense account is credited. Note, suspense account is a temporary measure. The error must be investigated, corrected, and suspense account closed. Adjustment of net profit or loss. Errors may affect reported profit or loss. When errors are found corrected, reported profit or loss must be adjusted to correct the effect of the errors. Errors must be carefully analyzed to determine their effect on the financial reports. In this session, we discussed the difference between errors disclosed by the trial balance and the errors that are not disclosed by the trial balance. We identified and explained the errors that are not disclosed by the trial balance and the errors that are disclosed by the trial balance.